And welcome back to Good Morning Kenya. My name is Mike Megu. Many thanks for tuning in to Good Morning Kenya. Now, I want us to explore how you can create sustainable wealth in a world that is increasingly defined by uncertainties. We are talking about inflation shocks, geopolitical tensions, matters to do with technological disruptions, all that. And as Africa Forward Summit is happening right here in Nairobi, even as Africa is positioning itself as the next frontier for investment and enterprise, I want us to explore and see how volatility can be turned into an opportunity. And I'm having that conversation with Isha Dunga, who is a corporate trainer, a business and personal finance coach. Karibu sana.
Thank you so much.
How are you doing this morning?
I'm doing okay. You well?
Kabisa,
it's
kabisa.
A bit chilly.
Yes.
Yeah, sure.
Kumenyesha asubuhi.
Of course.
And also we are expecting to have CPA Ken Odongo, who is the director, Focus Business College. Let's get into it. And Isha, you know, let's talk about start with matters to do with inflation. You know, according to Kenya National Bureau of Statistics, there's an indication that inflation in the month of April rose to around 5.6%, and it was largely driven by matters to do with the housing costs, food, transport. And even though this is within the CBK range, why do you think that many Kenyans still feel that they are financially strained? Are we dealing with an economy where the official macroeconomic stability is not translating to household financial comforts?
Well, thank you so much, Mike. And I'm really getting to like that perspective that you're bringing, because many Kenyans have, in most of the occasions, not been able to experience the numbers that are being, put outside there in terms of the economic factors and, measures, translating into the real life, impact. And it's a question of really having a logical discussion about what really matters in the life of the Kenyans. Something that is very important that we need to take care of is that most of these indicators are actually being taken from, number one, large corporations. Number two, they are taken at very top levels that are not probably able to get down to the very common person in terms of what they're really feeling. And then number three, even some of the data sources are also making it, not to have the real situation that is actually happening on the ground. One thing that is very common is that in Kenya, the statistics is that about less than actually 10% of the population are in formal employment. And therefore, that population probably, the statistics that we're talking about can probably be able to apply. Having been able to see the statistics in terms of inflation rising, stabilizing at around 5.6, may be able to apply it to the population that is on formal employment, and being able to really show what is happening in terms of that cost of living. But when it comes to now the actual sense, the cost of living for the common person who is not now within the grid of that part of data-driven analysis is really facing probably turmoil times. And I will get down to you that when you're looking at the inflation, we are not probably able to get down to the border guy, because largely, if at all inflation stabilizes, the prices of the commodities, maybe after rising, they don't go back to their original status. If bread came from 45 shillings and it rose to 55 or 60 shillings, it doesn't go back, even if the numbers now shows stability. But then again, look at this person who is getting to earn, having his income constant. It means even if the stability rises and these kind of things like the subsidies that the government were providing in terms of ensuring that even the fuel costs remain a little bit lower are removed, then it becomes a very difficult economy for that lower person who is getting to earn less. Again, look at it from the perspective of Mama Mboga. You see, when Mama Mboga is having the little amount of money that he's been able to earn from the sale of the mboga, then to what level is the purchase power of this person affected when this person wants to really get into the other aspect of the expenditure? So that grid of thinking makes it almost impossible to have the numbers that have been taken by the KNBS to reflect literally in terms of the financial comfort to the common wananchi. Then I would also look at it from the perspective of the global disruptions that are actually getting into our country these days. I used to say during the days of COVID that, in fact, I think after COVID is when people came to realize that anything to do with the global shocks has got a direct impact into the life of even the lowest person within a country.
Generally the economy.
Yes, generally, and now specifically to the various households that are there. So if you look at it from this perspective, that when the COVID was here, people, before it came, people thought about it as a Chinese thing. But then little did they know that global shocks, the waves kept doing what? They kept coming up to the very moment that we are getting into, our each and every livelihood. And therefore, when we are talking about the global disruptions, like the geopolitical tensions and the unemployment issues, the things like the war that are taking place now, they disrupt the current supply chain movement. And this actually reduces the perspective of the purchase power, the ability of the common person to be able to continue doing business normally. The SMEs are seriously affected. The tenders that actually have been flying up and down, and then the competitions here and there are becoming so cutthroat that the normal business is not able to make as much as they would be able to. People are actually cutting on expenses. People are actually laying off workers in order to keep on surviving. And this actually impacts on the local person to a point whereby they cannot even be able to afford the very minimum of the livelihood.
Yes, and it's important that you brought about that aspect of SMEs, because we keep having SMEs in Kenya struggling with matters to do with the expensive credit and reduced consumer spending. Why do you think there's this recurrence of such matters, CPA? And thank you for making time.
Thank you so much. God bless
Karibu
you.
sana.
Asante.
So what do you think we keep struggling, having these issues of SMEs having to struggle with matters of reduced consumer spending and also expensive credit and even slower growth?
Thank you so much. First of all, I would want to say that I'm so grateful to be here today, this morning. And it's a very important topic, a topic that basically resonates with you and me and the public that is basically out there. When you talk about economic disruptions, it actually goes all the way to the pocket of the common person. When you have the normal economic disruptions that we have currently in our countries, the downtowns, uncertainty, when it comes to spending, you'll not spend, especially when you know that the times are very hard and the times are very uncertain. You tend to basically withhold on spending, maybe to take care of the future. So that happens to consumer spending going very low. Yes, and businesses again also suffer when consumer spending goes low, because when it comes to spending, that is the demand on that product. So that's why business tend to fail when there's these disruptions in a country.
And also when you look at how CBK is approaching this, they have been on a trajectory of cutting rates. Interest rates multiple times, maybe in an attempt to stimulate the private sector. But my question to you is, are lower rates enough to revive wealth creation when confidence in the economy is not at 100%?
Not per se. It's a series of a number of things. Lowering rates, again, in itself, it's not the only way. The other ways that would be very applicable is creation of wealth. If you lower the rates, but then there's no creation of wealth, then there's not ability to create wealth, then nobody is going to go for even the lower credits. There has to be a platform, for people to be able to create wealth and for people to be able to grow. Yes. So it's not just about lowering the rates, but it's about also a country where we are able to create opportunity for our people. We are able to stimulate the education sector. People are able to be empowered, so that even as they take the credits and the loans, they're able to tap into the economy and create wealth.
Would that be incentivizing enough for people to create wealth?
No, I agree with him. You know, when it comes to a stimulus point of enabling the economy
Yes.
to revitalize and bring wealth into existence, and not to just but actually bringing wealth.
Yes.
It's about creating an environment that can enable the businesses to thrive. And I can be able to tell you that one of the most difficult things or times that the businesses are facing today
Yes.
is the environment for the wealth creation.
Yes.
Because as at now, number one, it has become very expensive to do business in Kenya due to the various compliance issues that are there. Number two, there are a lot of regulations and the policy issues
Yes.
that actually surrounds the business. In fact, I normally make this light joke that in Kenya, when you simply turn yourself into a businessman, you become a potential suspect to the government. So every perspective, every government organization that are relating to the businesses are looking at you as a potential either source of income to them or a way through which they can be able to get something out of you, or frustrate you. Why am I saying this? It's because there are certain policies that sometimes come into play within either the county government perspectives or the national government perspectives that makes the businesses to be suffocated in terms of creating the wealth. And so we are also probably not, we cannot be actually sleeping to the cognizant fact that there are certain areas of the government, departments that are also trying to ensure that the businesses get opportunities to be able to thrive. And because of that, it becomes at least the mandatory feeling of the businesses to identify now the various opportunities that they can be able to exploit for the purpose of ensuring that they use the various available stimulus to be able to thrive. One, if the government is actually lowering the rates through the CBK, is an opportunity to access the credits. But again, there should be regulations within the credit providers that risk analysis within those SMEs should actually risk analysis standards should also be lowered to enable even the startups to get into the grid of financial accessibility and inclusivity, to ensure that even as we try to find a way through which we can enable a sustainable wealth creation from the business perspective, the financial inclusivity is an oil factor that makes the businesses to really thrive. And therefore, when we are looking at an SME or a business in context, then the stimulus of the low interest rate is a key component. But it should also be able to get down to the point whereby the real providers are becoming cognizant of the fact that they are business difficult times, and they need to also take into consideration the kind of sectors that they're dealing with, so that they can be able to oil and revitalize the economy through financial access.
We need to understand volatility within the Kenyan context, because sometimes when you talk about volatile markets, the first thing that comes to mind is the stock market. But volatility in Kenya sometimes is showing up in fuel prices, food prices, and also taxes, currency fluctuations, such matters. CPA, how should Kenyans, just ordinary Kenyans, understand economic volatility?
Thank you so much once again, but I would love to digress a bit. We were talking about the issues of the interest rate, which my colleague has also delved in and expounded it. It's not just about offering lower interest rate. We talked about many times there has been a lot of empowerment, the government putting cash to the local mwananchi. But if there is no knowledge behind it, then it becomes very difficult to grow such an economy. But again, issues of regulations, issues of taxes per se. The moment you step into the business and you do not understand tax, you set yourself into a trap.
Yeah.
Not just a small trap, a huge, huge trap.
Allow me to cut you short. We go for a short break. We come back and execute at that point. What you are seeing on your screen are the live pictures from KICC, where the Forward Africa Summit is happening, and we'll be bringing you updates as the event happens. We take a short break. We'll be back for this conversation. Stay with us. Welcome back. You're still watching KBC Channel 1. This is Good Morning Kenya, and we're talking about how to navigate wealth creation in a volatile market. And we were trying to understand market volatility within the Kenyan context. And CPA, you were explaining that.
We stopped at a point we were talking about taxes.
Yes.
And we say that low interest in itself is not the solution. There's a whole lot to the aspect of business.
Yes.
And we're saying that, number one, if you invest into business without understanding regulation, understanding taxes, you actually setting yourself up trouble.
Yes.
In that, you have to understand the whole dynamics around business. Without that knowledge, you'll actually find yourself operating on a worse situation that you are in. A given scenario, as we interact with smaller businesses that try to expand,
yes.
One of the issues that actually happens to these smaller businesses that they try to thrive. Along the way, they get into trouble where you find all of a sudden authorities, you've not paid a tax of 5 million, you've not paid a tax of 20 million, and the whole thing goes down. Yes. So therefore, bringing us to an aspect that, in as much as a country is also trying to lower the interest rate, there's need for information. There's need for a space where, create forums, not just forums at the top level, but even at the local levels where business or SMEs are taught on how to operate taxes around regulations.
Yes.
You should also have idea on regulations.
Who is responsible for this information that you're talking about?
I would say that at the top is the government, but you also have professionals, it's a space for professionals like us also to tap that, online, because presently we can do it so easy. You simply need to tap onto your phone and you can share one or two, like the small SMEs, you can tell them about TOT, somebody who does maybe a turnover of $1 million to 25, and it doesn't keep proper records, what are some of the taxes that you can do? TOT would be good for such business because you only need to keep records of your sales only. But also on the space of regulations, before you tap into any space, what are regulations that are basically involved in this business? Because your growth is determined again by, how compliant you are. If you're not very compliant, at the end of the day, even as you strive to grow, you may never grow as a business. So you have to actually understand the whole space of business in order for these businesses to thrive in this particular country.
Yes. Yeah. And also, Isha, as we've said, inflation rose to around 5.6% in April. That is according to KNBS. So does that jump, because it rose from 4.4 to 5.6, what does that jump tell in as far as susceptibility of Kenyan households is concerned at businesses at global and domestic level?
First, let us get to underscore the context of the inflation influence in the life of a business and also in the life of a household.
Yes.
You see, when an inflation jumps from probably a percentage to another one, then it shows that the purchase power of either business or an individual has basically been affected by the then percentage. And therefore, when a business is looking at it, when we look at it from the frontier perspective of the business, you'll realize that the business will try to cut costs in order to ensure that they continue surviving. Because what is the main essence of a business continuing to be in business? Because one of the major principles is that a business should be a going concern. And when it stops being a going concern, then majorly it's not going to operate within the context of the profitability. Then what does that really translate into the life of a business? It means, therefore, then that a business that has been affected by such a level of inflation cannot be able to really prosper in terms of ensuring that they expand. They can also not be able to bring out probably the opportunity for employing other people and increasing the employment rate within the country. Then number two, what does this also do to the various households? Because it is these businesses that are actually sustaining the population. It is these SMEs that are actually sustaining both formal and the informal sector. And so when you look at the whole value chain of a business operations, you look at the person who is supplying this business, you look at that driver that actually drives for that business, you look at maybe the cleaner down there, you'll be able to look at every perspective of the supply chain of this business. So a rise in inflation basically affect the business in a more negative way in terms of ensuring that the sustainability of both an individual and also the persons, I mean the businesses themselves, are actually contextualized. There's something that my brother also brought on board when it comes to the perspective of the taxations. You see, there are also these silent factors that are also going to affect the operations of the businesses, that in as much as inflation can also be one of the effects that that impacts a business, or factors that impacts a business, you'll realize that those silent policies that are also some of the major factors. Today, if you can be able to jump into business without understanding the context of taxation, then you are actually geared towards failure, because the government, through the Kenya Revenue Authority, has also put themselves in such a way that they are monitoring the businesses like a mirror. They are able to see every transactions, and apart from that, they are also transferring the burden of the businesses, actually declaring not only whatever they have been able to earn, but also proving whatever they have been able to spend. And that particular, impact has actually become so much burdensome to the businesses, to a point whereby if at all you are not geared towards compliance as a business person, then definitely you are geared towards failing in terms of the business, because you will be slapped at a point of time.
Let me to cut you short.
Sorry.
And what you're seeing on your screen is the arrival of heads of state, and that is head of state of Liberia arriving at KICC for the second day of Africa Forward Summit. Of course, we shall be bringing you live updates of events as they unfold at KICC. Remember, this is Africa Forward Summit. It is a two-day event that is happening right here in Nairobi, and we shall be bringing you up to date or up to speed with what is happening. If you can continue.
Yeah. So what I'm trying to say is that businesses basically must be very conscious enough in terms of the compliances. And that compliance is actually one of the very major factors that can be able to either make a business to succeed or make a business to fail. And the compliance, the major part is about your tax payment position, your liabilities, your health status in terms of the your tax liability. It's very important for a business to really be cognizant about that. And my brother also talked about the knowledge and enlightenment. I also would be able to say that apart from the experts that are also in the market that can tap into the gap of the knowledge gap, there is also the bit of the duty of the Kenya Revenue Authority also getting out to give enlightenment to the mass population. Because, first of all, my grandmother in the village is not aware on how he's supposed to be able to prove the expenses through the e-TIMS, correct? So it is also the duty of the Kenya Revenue Authority through their various agents and also outlets of communications to ensure that this information reaches the mass majority for the purpose of ensuring that we have got a stable economy through the complying businesses.
Of course, what you're seeing on your screen is the arrival of Ghanaian President John Mahama arriving at KICC for the second leg of Africa Forward Summit that is happening right here in Nairobi. You can see him there arriving at KICC. And of course, today it is going to be quite a busy day for the heads of state as during that conference, the summit that is happening at KICC, and we shall be bringing you live updates of the event as it unfolds. Now, CPA, when you look at matters to do with employment, there's a growing perception that despite economic growth figures, many young professionals, yes, they are earning, but they are not building meaningful wealth. Is this a case of an income crisis or a cost of living crisis, or it's a matter of financial literacy crisis?
Thank you so much. I think it's a whole aspect of many things that we've talked about. But I would love also to build it from a space where we had asked my colleague something on inflation. I believe if we talk about inflation, if you look at it a whole, about 80% do not even understand what inflation is. as a country. Yes, they don't even understand what is inflation. If today you go on the street and ask one simple question, what is inflation? I believe understanding inflation, number one, that is a persistent rise in the prices of commodities, very important. And a whole, in as much as we always say that there is the positive of inflation, you know, which many people don't know, that inflation at lower level is good for the economy. However, when you have the levels of hyperinflation, then it becomes very dangerous to the economy, such as my colleague has said, you know, issues to do with unemployment. It also causes social crimes. You know, why is there crime in the society? Because when the cost of living basically goes high, what happens is that, you know, a huge mass, you know, resort to other dubious way of making money in the economy.
Maybe CPA, yes. That is the arrival of UN SecGen, that is Antonio Gutierrez, is part of this summit that is happening right here in Nairobi. He's just arrived at KICC, if you may. Continue.
Thank you. So back to our question that has just been posed, you know, why is the situation is still not very good for the young people? You see, a business cannot, for those that are in employment, a business can pay you as much as they're able to make. If a business is not able to make as much as possible, then they're not able to pay the youths that are in the job market. But again, there is also a mention of the literacy, what goes on, you know. We have, what I've said in the culture of an African culture, we have been cultured to go for employment, which I strongly think that the government need to refocus on that and encourage people into wealth creation, more of wealth creation. But in this wealth creation, there's the aspect of information, that in order for me to create wealth, then I need to have information. Information comes from sourcing knowledge. So I think the young people also in the space where they are, they need to look at the needs of the society, because business are basically created out of needs of the society. What does the society basically needs at the present time? Research on what the society needs, then from there begin to build a business. But I would say that when it comes to, you know, issues, the young people still feeling that there's not something in their pocket, is a whole lot of many things. Business, I've said, number one, cannot pay you if they're not making money, especially when you talk about volatility. Yes. If the business are doing very bad, we expect that, you know, the cuts into the salaries, and with the cuts, you know, the young people are not able to get enough money even to put to have a saving and to venture into the business. But you're also saying that if they go to the aspect of financial literacy, it's a whole, you know, you have, on the financial literacy, you have to spend time, you know, to get knowledge, to do your due diligence. That is in the case of where you want to involve yourself in business, which not many people take, but there's need for that information. And I think at the present time, I would say it out loud, what is happening in our country, that young people are beginning to take spaces. Young people have begun to open companies. Young people have shifted from the mindset that I have to basically be employed. That when I step out of school, I'm going for employment. Young people begin to think, what do I do? Yes.
And so there are a lot of them getting into MMFs.
Yes.
We have many people. Why do you think actually there's that rise, an uptick in the way people now are taking money market funds?
I think it is very interesting. You see, in the current generations, there are a lot of hype within probably new things. That is one. Not that MMF are new things, but you see now, when there's new knowledge in the market, it really spreads like bushfire. Yes. And you see, many people are actually looking at MMF as a vehicle of investment, even though I may be able to say that that is also not quite of a myopic view. That an MMF is simply a point whereby you can be able to pull up your funds for the purpose of whatever the kind of investment you'd want to make over a time. But you're taking into consideration the effect or the influence of the inflation within that funds that you're actually pulling together. So why are actually young people and many people, there's also much of a rush in the same, I think in the current space of information and the knowledge, we are getting to a point whereby Africa is changing, and I need to really bring that into your attention. That one of the greatest opportunities that Africa is actually having is, and the greatest is the population, and that young population.
Is actually the youngest continent.
Is the youngest continent.
Yes.
Meaning we are having a lot of labor force, And so this labor force actually is an attractive source of industrialization point. So when there's that bit of industrialization, it's actually also a position whereby we can be able to attract capital flow. So Africa today is actually starting to experience a bit of influx in terms of the capital. And so various opportunities are being sought for in terms of investments. To be able to know how we can be able to really spread this particular capital. Now, when it comes to putting up this capital for the purpose of a future work or maybe investing it, that's where you realize that now the various vehicles of investments like the MMF, the T-bills, the bonds are becoming more and more popular. And so it calls for the question of what is the best knowledge dispensation that we can be able to get in terms of ensuring that people get the right vehicles of investments. Number two, this kind of infrastructural and the network development within our economy, especially within the fintech corridor. You realize that even most of the MMFs today, I don't have to walk to the physical offices of the companies that are running the MMFs in order to invest. From my phone, I can be able to get the company and then get money from my phone, from my M-Pesa, and then transfer, and then I've already started doing my investments. That kind of knowledge gap was existing before. And apart from that one, the technological advancement and the improvements have actually also made it very easy for people to really now get to access such kind of opportunities. During the days of my father invested in the shares of in the Nairobi Stock Exchange. Yes. And my father was a primary school teacher in the village. But he had to literally travel to Nairobi to go and get, the investment to take place. That is not what actually has to happen this day. What has to happen is that you can simply get to your phone and then get to invest within the sector that you want to invest, especially in the Nairobi Securities, exchange. Therefore, that knowledge gap has actually thinned, and many people have been able to be enlightened in terms of the investments opportunities that are available. And because of that, the popularity of these various, investments opportunities are becoming more and more, immense.
What you're seeing on your screen is the arrival of Botswana president, that is Nduma Mboko, arriving at KICC. And today, it's going to be quite a hectic day, or quite a busy day at KICC. We'll have plenaries with African and French CEOs on matters to do with green industrialization and energy transition. And also there will be a plenary working lunch on the reform on the international financial architecture, African countries' access to sustainable finances, just some of the things that will be taking place at KICC, and the arrivals are still happening, and we shall be bringing you more on this. Coming back to our conversation, gentlemen, I also want to get a feel of what you think about the Africa Forward Summit now that this is a first happening in Kenya, here in Nairobi. Why do you think Kenya hosted this?
I would say it's a great, number one, a great opportunity. But if you look at Kenya also in the space of Africa, Kenya is one of the countries that has opened doors to many things. So Kenya being that is the one that is hosting, it's a milestone. But I would say Kenya has taken space in Africa. Kenya is not just a country, but Kenya is a hub of many things. You look at the UN is in Kenya. So we're really happy to have the conference in Kenya.
Dunga, what do you think about matters when it comes to bilateral ties of Kenya with other African countries, and also by extension, France?
I think I'm very happy at the scramble of Africa that is actually taking shape in the latest days, because we've been able to have a number of, giants, the economic giants, coming to scramble for again position within Africa, but this time around in a more strategic move. And so in that particular strategic move, you realize that, countries like France, countries like China, the United States, are they looking forward to bringing their investment, and Kenya becoming one of the destinations, for such investments. One thing that is also making me happy is that being that we are probably in the chessboard, Kenya is now starting to actually become a hub of where we can be able to start dictating the terms of our cooperations. Because in terms of our collaborations with this kind of large world economies, I looked at the some of the pacts that have been signed by our country in terms of the capital access. There is the bit of lobbying for a better financial access. Why? Because there has been over analysis in terms of the risk that Africa poses in terms of our capital utilization. Many other countries that are actually targeting Africa are looking at Africa as a risky market. And you realize that now in this kind of conversation, especially this Africa Forward Summit, one of the major conversation is about how we are not that risky destination in terms of capital flow. And therefore, what I'm happy about is the fact that we are able to sit on the table and have a conversation whereby we can have an influence in our infrastructure, we can have an influence in our tech industry, we can have an influence, a conversation on the influence of even our financial services. So that if you look at banks like Equity signing up big packs of getting a lot of money and then being able to advance this kind of loans in dollar-denominated currency to the SMEs and the businesses that would also want to prosper within the country, is a conversation that Africa is starting to wake up, and the giant is actually getting an opportunity to move forward.
Well, that is Azali Asumani, who is Honorable Azali Asumani, who is the president of Comoros, arriving at KICC. This is quite a high-level delegation that we are seeing, and we have many heads of state coming to Kenya for this summit. What do you think should be the take-home, especially for Kenya, regarding such a big event that is happening here?
As a businessman, the first thing is that what are the opportunities that are aligned? And that big cake that has been actually presented, what are you going to cut to take to your place? You see, when we have got University of Nairobi signing up a pact for an innovation and science hub within that, the question is, to what level are you going to be able to upgrade yourself as an individual and as a business to take part within that particular hub and especially benefit from such kind of opportunities? This is also the moment that businesses should be able to, look forward into becoming more upgraded in their fight for spaces within the table of the cakes that have been presented. This is the point you're supposed to be able to lobby in terms of your associations, to be able to get whatever the kind of inclusivity that have been actually proved and provided for in that particular table. When we are looking at the finance inclusivity, one of the greatest cutthroat competition points is about access to finance for businesses. You would want to really expand, but then you can't be able to get that money to expand. But then this particular conversation that has been brought through this summit is actually presenting a level of finance inclusivity and also technology. So as a business, how can you be able to position yourself to be able to tap into that gap? That is the conversation we're supposed to be having. So as a take home, every business and Kenya should be able to understand that more and more opportunities are going to present themselves here. They are going to be very massive opportunities thereafter. The question is, how are we going to make use of such opportunities? How are we going to position ourselves in terms of tapping into such kind of opportunities?
Do you think that this underscores the aspect that Africa is the next frontier for innovation and enterprise?
If you look at Africa, just as my colleague says, Africa is opening up to massive opportunity. And the leverage that we have is the massive numbers of the young people that we have. So I would definitely agree that, Africa now becomes the hub of great opportunity. Look at these more developed countries. Where they're tapping their resources to. They're tapping their resources to Africa. But just to emphasize on the big thing, just as we have the conference that we have, it's creation of opportunity. And everybody, even as an individual, I'm tapped. What is happening? Where is the money going? Because as a businessman, we're very keen. Where is the money going? What are some of the opportunity that comes? Because with this conference comes opportunity. And we say that the ones that are going to be enlightened are the ones that are going to have a share of the cake. So I think as a population and as a nation, our eyes should be very open on the conference, get the information, if we can participate in the space, let's participate so that we have a share of the cake that basically comes to us as Kenyans and Africa in general. Yes.
You know, coming back to the country, you know, Kenya is not new to fintech. And matters to do with the digital wealth creation. But now, you see, we have quite a good number of penetration when it comes to mobile money subscription, and you know, it's estimated that that penetration is estimated at 90%, meaning that we have a financially digitized society. But has fintech fundamentally changed how wealth is created within the country?
Sure, it has. You know, we have talked over and over, you know, the digital space and what it has impacted. We say that if you look at the digital space currently, you know, we have Safaricom branching it, even into Ethiopia, expanding its boundary. You know, when it comes to issues of banks, you look at today banks, I don't have to go to the bank. You know, I simply, at the click of my button, I need to do a transaction that I basically need to do. Yes. So I would say it has done a tremendous work to a population that we have in terms of wealth creation. Yes. So again, you know, for the mass, that is still pending, there's also still need to tap this mass, that the smaller percentage that is still not open to this, to open up to that, so that a whole population, we can enjoy the benefits of the digital space.
Yes. You know, Dunga, what do you think? You know, let's say fintech has expanded the aspect of financial inclusion within the country. But on the other hand, do you think it has created a culture of instant gratification and overconsumption through easy digital credit and mobile lending?
I think that is seriously a very important question, probably because one of the greatest problems that the mass population is facing today is the misuse of whatever they earn. And this one comes due to the fact that there is easy access for that particular finance within the mobile phones. But allow me a little bit before I delve there to echo something that CPA has been able to talk about. And that is concerning the financial inclusivity with regards to the expansion of, and also, I mean, the influence in our economy. He's talked of a very important thing about the money, I mean, the finances being accessible to the people, and being able to use it for the purpose of actually even expanding their businesses and that particular access. But there's something that I would also want to bring, you know, on board, and that is about the fact that we are having much of the population, you know, being able to access the mainstream banking systems. Basically, have actually faced the cutthroat competition from the uprising fintechs that are making it even difficult for them to sell their financial services. And that is why, you know, when we see such opportunities like we are now getting to see some of them happening here, the innovation that are coming within the context of our country is making it possible that in the near future, in fact, I'm telling you that in the next 10 years, our country will not be talking about problems of financial inclusivity, but we'll be talking about inspiring a generation that can be having a culture of entrepreneurship, development-oriented, and conscious about whatever the rights that they're supposed to be having in terms of their growth as an African country. Now, get back to now this particular access to finances and how it impacts also into the discipline and also the life of an individual. Many people have actually dipped themselves into debt.
That is the arrival of Senegal President Honorable Diomaye, who's arrived at KICC for the Africa Forward Summit. Let's continue.
All right. So if you look at basically the way people are now accessing the finances through the easier ways and channels, many of the population have actually misused the access to finances, and many households have actually been dipped into debt because of unplanned expenditures that they have been able to get themselves into. Apparently, you'll realize that people would want to borrow loans without even any kind of plans. And somebody simply borrow because they are able to access that money. Somebody doesn't borrow because they have got a plan where they are going to invest that money. Somebody borrows because it is easier to access. Somebody borrows because an opportunity for borrowing has actually come up. But that is now the start of the problem. The lack of the information about what this money is going to impact in your life becomes now the greatest impediment of a financial discipline and the financial progress of an individual. Simply because you are doing it out of, number one, the exposure to the access, and number two, the fact that it is easier to get, and the fact that you can be able to get that money and doesn't care about even refunds. Many people have had even their houses auctioned simply because they decided to take loans for purpose of show. They went to buy certain liabilities that they wanted people to see so that they can be misconstrued to be doing well. And so that access and without knowledge is one of the reasons that some people have actually been impacted negatively in terms of their growth and sustainability.
Yes, and talking of sustainability, scaling sustainability is one of the things that local startups deal with. And even though when you look at Kenya, it's celebrated for mobile money and matters to do with fintech innovation. But then again, the question is, we are good at innovation, but then again, are we weak at commercializing and long-term wealth building? What do you think, CPA?
Very interesting. Just to talk about the fintech and the challenges my colleague has talked about. Very interesting. It is as much as that we have challenges to do with this money that is available. We must also appreciate that the fact that the times that would look back, access to finance was a huge menace. Accessing even as low as 1,000 would be a challenge. If you look way back, maybe go back 10 years behind. I think what needs to be done, and what we must agree that needs to be done, is information. In as much as you have found access to finances, being a challenge where people take loans and they don't use them for the intended purpose, there's need for access for information. Actually, the masses that we have, are aware of where the money goes to. Once you take this money, how do you tap in so that they don't fall into those spaces? But I believe if you were to go back in a space where these sources of finances are not there, will bring a huge challenge. So there's actually a huge need for information, that the masses need to be educated, the power of information, that when you take these sources of money, then you need to tap them into viable projects that at the end of the day lead to creation of more cash even to other businesses. That's what you need to. Yes. Then back to your question.
Yes. And also there's, we are living in the age of technological advancement, and AI is one of the things that the discussions are revolving around, digital investing and even app-based wealth platforms. Do you think the younger generation is becoming financially smarter, or they are just exposed to more financial risk?
Well, smarter in terms of its comparability may not really apply, because smarter compared to what level or maybe what particular basis point. But I can be able to say, yes, there is better knowledge increase, there is better information flow, and the truth is, by the time you are the age of the current youth, whatever the current youth actually understands in terms of the financial management, financial technicalities and dynamics is quite different from by that time that you are actually of the same age. And therefore, we must be able to appreciate the fact that there is more knowledge flow that is actually impacting on even how people are making decisions, especially the young people, with regards to their financial knowledge and information. Now, when it comes to the perspective of the AI and also the technological shifts, a lot of shifts are actually taking place. In fact, today, when you're looking at the strategic placements and strategic development by the companies and the various SMEs as well as corporations. I would even try to say that it is not very sustainable to do a strategic plan that is going to last 5 years, because there are a lot of shifts in terms of the dynamics of a business operations. There is that is
the president of Nigeria, Honorable Tinubu, His Excellency Tinubu, arriving at KICC for the Africa Forward Summit. Yes.
So I was saying that there are a lot of shifts in terms of the business dynamics that are actually making it almost impossible to do a 5-year plan. In fact, most of the companies that have been able to do a 5-year plan, even from now, bet me, they will be able to change those plans midways because of a lot of uncertainties that are actually taking place. There are a lot of disruptions in terms of the technology, the growth, in terms of the supply chain, in terms of the financial inclusivity access, and a lot of political shifts, regulations that are taking place. And therefore, it is very important for a country and as well as a business to clearly redefine the perspective of prosperity in terms and in terms of the context of our country and in terms of the context of Africa. We have to look at the basic perspective of resilience to these shocks. You know, we now don't look at the mere wealth accumulations as well as readiness in terms of accumulation, but we look at now to what extent can you be able to sustain the external shocks when they be able to come and affect your business. How are you ready with terms of the business development perspectives in terms of your technology when things are shifting? To what extent are you also shifting the same way? Initially, people used to go to the banks, but then there was a problem of when you come to the bank, but you decide to go to the washroom, coming back, you realize somebody has already sat on your seat. But then the technological shifts came to a point whereby you get to the bank, take a receipt. And so you can sit anywhere. And then you can be able to be called so that that kind of consistency and also order is maintained. But today, banks are now realizing that the larger the bank holds, the more disadvantaged they are because they are now attacking the bank. So what do? They try to dispense a lot of their services outside the bank to ensure that that particular, they can serve so many, but at the convenience of their reach. Those kind of disruptions are making it almost impossible to sustain a plan for over a long period of time. So the businesses must actually wake up to the fact that there are a lot of shifts, and these shifts take place even into the people.
So in other words, they have to anticipate these shifts.
These shifts. And so what makes them to be actually capable is to what extent are they able to sustain the shocks and the resilience that are, the shocks and the resilient way through which they will be able to become when those shocks actually come on board. Look at the people, even the shifts in the people. I can be able to tell you today that it is almost difficult, or let me say impossible, to simply wake up and fire someone from your workplace and the company is yours. Why? Because the people have also become so much enlightened to a point whereby you must be able to also, as a business, adjust to the fact that you need to be having the knowledge, the information, the way through which you can be able to sustain your population and your workforce to continue surviving that particular shock that can be able to come, both internal and also external. So it is very important we get to understand, all these facts. So I would be able to say that businesses must be able to wake up to the fact that the shifts in the technology is just but one way through which they can be able to sustain the shocks and also become updated in terms of their movement.
That is the arrival of Ethiopian president, that is Honorable Haile Selassie. You know, that Ethiopia is our next door neighbor, and they're part of this summit that is happening right here in Nairobi. That is Haile Selassie, president of Ethiopia. If you may continue on your point.
So I was saying that it's a point where the businesses must wake up to the fact that shifts are happening within the various fronts. Internally, the people are becoming more and more informed, and so the business have to upgrade in terms of their knowledge and on people management. Externally, there are shocks in terms of the inflation. We have been able to talk about that. There are shocks in also competition. You know, every business that is doing well, there is another business that is actually looking at how well they are doing and studying so that they can be able to improve on whatever they are doing. And this is actually resulting into very serious cutthroat competition. And that competition is what is going to make other businesses fall and others to survive. So as a business, how do you anticipate to really sustain such kind of a shock when it comes on board, including matters to do with, the cost of transaction costs in terms of exchange rates. How is a business going to prepare themselves for the unstable exchange rate environment? And how they're going to be able to brave themselves for such kind of an external shock? That is what is going to show a prosperous business. It is going to show how you can be able to sustain such kind of level of shocks.
I think it applies to what you said before. Even when it comes to taxes, you have to know the kind of taxes that your business will face when you are starting a business. I think it's the same anticipation of external shocks that he's talking about. But let us look at the whole aspect of investment culture and wealth strategy. You know, as we had said before, money market funds have become very ubiquitous among Kenyan retail investors and even young professionals who are seeking safe return. But then again, some investors may be worried about declining money market funds returns. Question is, are we becoming too dependent on what you'd say is defensive investing?
So, a very interesting question again. Allow me also just to expound on something that is very important.
Yes.
It's a conversation that I had, you know, the dynamics that are changing due to the technology. You know, we had a conversation with a friend and we were, you know, you cannot, you know, a business, it keeps on evolving, you know, and there's a lot of stuff that happens to business. So, you know, actually, as a business, we say that, you know, you cannot even have a 5-year plan at the present time. But you have to, you're constantly, as a result of technology, you're constantly, you know, looking at your business to see what you need to incorporate. But also as a result of the huge competition that we have had, we say that, you know, it has brought some business down. But again, also, if you look at it on the other aspect, it has also elevated a number of businesses further. Yes. So I would say technology is good, but again, also with the technology, with the issues that come with technology, there are also challenges that comes with it that my colleague has raised. You know, some businesses are falling, you know, because if you don't understand the scope of it, you know, like to date, you know, technology can take you down. But if you understand it much better, again, it elevates your business further and higher. When it comes back to the dynamics of investing, you know, I think for me, I've always, you know, felt that, you know, there's not just a one-stop for investment.
That is President Paul Kagame of Rwanda arriving at KICC for this summit. Paul Kagame there being received by CS Rebecca Miano, CS for Tourism Rebecca Miano. Arriving there at KICC for the Africa Forward Summit. Remember, we shall be bringing you live updates of this event as it unfolds, so keep it KBC Channel 1. We may continue on it.
So, back to on investment. However, there's not just a one-stop for investment. There's need for diversification. Every investment that we take, there's always a reason why you take that investment. Like for the MMF, why do you go for the MMF? You don't just spot on an investment and you pick that investment. But you also say, because we were talking about volatility, the changing scope of countries, you know, we say there's need for diversification. But apart from that diversification, there's need for information, that even as we diversify, we do not end up diversifying and end up making losses. We say that for the MMF, if you look at presently, the rates are going even further, lower and lower.
Yes.
So again, the question is, you know, if the rates are going further lower, there's need for assessing where do we, as young people, as business people, where do we, the space that we need to put our money, that we say that diversification, you know, should we open businesses? Should we go to the special funds? Should we go to the shares? All this information that is available, should we go to farming? Should we go to the education space? All these spaces that we talk about, the key thing is knowledge and information. So that as we delve into going into whatever space that we choose in, there's need for information, and not just information, we carry out what we call due diligence to make sure that at the end of the day, when you tap into that space of wealth creation, we are well sure of what that space is all about. But again, there's a mention that we were talking about volatility. We did not talk about the aspect of sustainability. Again, at the present time when you have volatility, there's need for what we call, there's need for adaptability. How do we adapt to the shocks that we have? That is the question. Every investment will have shocks. You know, initially, people will be told, you know, the message that was basically being said is that MMF is safe. And guys were running and putting their money, the interest rate is 15%. Yes. Everybody is running to MMF. Currently, I think if you look at some of them, say it's not a very good idea because these are shocks that happen. So there's a need for adapting to these shocks. That's the big question. How do we adapt? One of the ways that we adapt, we said, is diversification. That don't throw all your money into MMF, but look for other varied sources of investment, and you carry out due diligence so that you put the money. When these shocks comes, you're able to adapt.
And this adaptability you're talking about is on the existing businesses, yes. And for the ones that are coming up, they have to anticipate these shocks that we are talking about. Is this something that they need to be taught, or is something they need to just find information on their own?
No, as a business person, I think my colleague have to agree. Every day you have to sit on a table. Every day as a business person. Yeah. Because your competitor could take your business the next day. So as a businessman, you have to every day study the market. When you wake up in the morning, a simple thing, you know, whatever business that you do, you know, sit down, look at the trend, look at what is happening, look at the challenges, study the future. If there's, you know, innovations that are likely to come. I'll give you, for example, an education sector. Initially, we were on the physical aspect of education, and there were schools or colleges or universities that were predominantly physical. Over time, this thing changed.
Let me cut you short a little bit. That is President of France, Emmanuel Macron, arriving at KICC. Remember, he's the co-host of this summit together with President William Ruto. That is Emmanuel Macron arriving right here, here in Nairobi at KICC, where the second leg of Africa Forward Summit is happening. And yeah. That is him entering there, making sure that this is an event that we shall be bringing you live updates from KICC as it unfolds. Let's continue on that point you have.
Yes. So there's need for, on a daily basis, but not only to businesses, even for those who are employed, there's need of basically because things are changing so fast. You could sit on your seat and the next day there's something coming up that is new.
Especially now we are living in the world of social media and technology advancement.
So you have to wake up every day, even the seat that you sit in, ask yourself a question. What is likely to happen?
You must be hungry for information.
Yes, you must. What is likely to happen?
Yes. And you know, traditionally, there are people who view matters to do with land and real estate as the safest form of wealth creation. But in today's volatile environment, is diversification becoming more important than ownership of what you'd say is a safe asset?
Well, that is true. Because I would say that, like he's been able to put it, when you diversify, you are reducing the risk, because diversification is a risk issue, is a risk mitigation factor. In fact, in talking about even the risk itself, I've got a lady friend of mine called Caro that developed a certain system that is used for risk mitigation. And I looked at the insights. One of the greatest part is about the diversification perspective after doing the risk analysis.
Yes.
In terms of the investments of a corporation, or in terms of the investments, or in terms of the operations of a business. And I must be able to say that even as we look at safe investments, many of the occasions, you may not be able to term an investment as a safe investment unless it is actually a government related type of investments. We call them the free risk investments vehicles, and one of them is the T-bills, that is the treasury bills, and the treasury bonds. But apparently, anything that is operating outside that, you may not be able to term it as safe, including even the MMFs, because you see now these are businesses that are run by people, and basically they're investing in also other markets, in as much as those markets are basically regulated. So you may not be able to entirely say that it is safe for you to probably invest in such kind of investment vehicles. But one thing I might be able to say that when you compare the safety and diversification, it is very important that any sort of a liberal and an investor that is looking at the market from the various concepts must underscore the importance of diversification. Real estate is one of the stable, let me not say safe, but one of the stable investment vehicles that you can be able to probably undertake.
So stability is not safety?
Stability is not basically safety, because you can talk about stability in terms of the storage of that particular wealth. We can also talk about the stability in terms of convertibility. We can also be able to talk about stability in terms of, in terms of the valuation. But then, when it comes to safety, you can be able to invest in a real estate in a place that at a point of time it converts to be a flood area, that all of a sudden it becomes useless. Yes, in the concept of stability, it was, but in terms of safety, it converts to something else. So basically, we can't be able to confuse stability versus, safety. But it is one of the most stable vehicles that you can be able to put up your investments. Number two, you look at also the various vehicles of investments. The level of the risks basically defines the returns. So if you'd be, there are various types of investors. There's an investor that would want to simply keep their capital. There is majorly we call them now the safeguards. They want to safeguard their capital. Then there's an investor that want to grow their wealth. Then there's an investor that want actually to make money. You get it? So depending on the type of an investor that you become or you are, basically it is also going to dictate the kind of investment they are going to undertake, regardless of either the safety, stability, or diversification perspective. But what I can be able to say is that the perspective of knowledge of information, the knowledge and flow of information into today's economy is making it very easy for people to access information where they can be able to put up their money and analyze the best options for investments, and then be able to put their money there. And therefore, in the current state of affairs, I would be able to say that the knowledge gap is becoming thin and opportunities are also widening. We have got certain scopes, like even now the crypto investments, that are becoming more complex, but again becoming popular. At the inset and the onset of their introduction stage, they became one of the very risky, investments. But at times, you realize that those probably who braced the risk have been able to probably make a lot more.
Allow me to cut you short. I want us to cross over to KICC.